Hey guys, Mike here. So, but what a crazy roller coaster day on Friday, if you saw that, and we're going to get into that and much more in tomorrow's video. By the way, don't miss it to set up the week because it's going to be a volatile week. And, today what we're talking about is your questions you ask, and there's some really good ones, like what is the best dollar cost averaging tools? And I'm going to show you some that are really, really powerful. Also, what we'll talk about here is, do you happen to know what is the day of the year that is considered to have the greatest average day return in the S&P? And I will tell you what that is. I discovered it when I was doing this video, came across the article for you guys, because when you guys asked a certain question about October, beginning of November, what are we looking at? So I'm going to talk to you about that as well. But I'm also going to start this off by saying this. People talk about pullbacks and you can't predict them, all this fun stuff. You actually can do that. You can get a very good idea of whether or not we're fixing to have a pullback, and is this the best time to be buying? Okay, and these are free tools, right? And you just combine very simple things, right? And there's a million things out there, but the ones I like to use, which is very simple here, what percentage of stocks are above their 50-day moving average? And if you notice, you'll get into a trend, right, where you start hitting these numbers. When you start getting up to, especially around 80, you got to start being aware of this and go, wow, 80% of stocks are above their 50-day moving average. And when you get up to 90, holy moly, right? So when you see this number going down, that means the market's going down, okay? But when you combine this with something like this, your sentiment, and we all know when this gets around 50, it's like, okay, everybody's wanting to pour in, everybody loves the market, all that good stuff. And then all of a sudden you have this pullback and the number of stocks above their 50, and especially their 200, that number starts to decline dramatically. And so when you combine certain things like the fear and greed indexes, those kind of readings and stuff, and you look at this, you can see as soon as you get up there, between 75 and 80 normally, 75, 85, somewhere in there, you see pullbacks. What do you see though? You can also measure out and go, wow, these pullbacks are getting slighter and slighter. This is a 10% right here. This was a 6%. This was a 2%. And this last one has been a 2%. I don't know if that's the end of it, but again, and then when you go to the 200, you're really going to see what I'm talking about, the percentage of stocks above their 200 moving average. But again, you come over and look at that one, and you can see it's just been in this range, right? Great range, percentage above the 200-day moving average. And you can see right there as we go through this, 65 to 80, baby. Hit 80, normally getting pullback. Hit 60, boom, away we go, okay? And even if it just trades along that 60 right there, that is a time to start accumulating, because you can see right here, it comes down and then you get this great run up, okay? And yes, there's little small pullbacks here and there, but mostly once it's gone, it's gone. So it's just been in this range this whole time. So it's a great indicator. Again, if you're on TradingView, you can pull this up for free right here. Just type in S&P 500 stocks above their 200 moving average. I'm using the S&P because that is the market and that's what's been leading, right? That's what has set new all-time highs, not the Qs, not the IWM. But you can try to play around with those as well. I put both of them in our morning news brief for everybody, so we get to track them and then see if they've gone up and down every week and that fun stuff. And when we start to get up to crazy levels with the fear and greed index, and with these, it's usually a no-brainer. We're going to have a pullback. You just got to figure out when it's going to be right there. But with this one, and this is what happens when this S&P indicator right here, is you'll see a range usually get set. And we've just been stuck in a range all year like this, okay? And so lately, it hadn't been coming down to 60, right? Every time it's come down to that 65 area right there, we get nice moves back up so far. And then you see recently, remember I told you the dip's been getting smaller and smaller, and what's been happening? It's been coming down around 72 and bouncing. So do we break the 72, come down to 65? That's what we got to figure out. The only time you've been above that, look at this, was back here in 2020, 2021, man. When things are going absolutely nuts, right? Remember that when they were pumping it through the roof, and then of course we had a nice big old crash. So you get up in that area, that's when you really are like, okay, it may be a minute, right? It may be a minute, but then when you start seeing levels get broke on that, you're like, okay, and the fear and greed index is going through the crazy, and all your mama's talking about buying stocks and your grandmas, then you know, okay? So hopefully that helps out, makes sense. Let me know if it does not. Now, this one says, isn't the last week of October usually lower before it takes back off in November historically? I'm going to let you listen to something I just did for the members on this because, again, it's a crapshoot. I'm going to let you look at the presidential election years, though, because those tend to be different. In 2020, obviously there was the election, and we went on a big rally after the election right there. You see we sold on into the election, then went on a huge rally coming up. Then we come back to 2016, sold down to the election, trying to get elected, huge rally coming up, right? So it didn't matter what was Democrat, Republican, whoever got elected. And you'll see, I mean, this changes because some of the times we're literally sitting in crashes, right? You go in 2012, or had a sitting president at the time, we're already in a downtrend, gets elected, dumps right here November 15th, and then we take off for year end going into next year, okay? Go up to 2008, does it really matter? No, because we're sitting in a crash. And by the way, can you imagine being Barack Obama or anybody coming into this right here? You're already in a major crash. You're down 43% in the market. The banks are failing. I'm like, yeah, no wonder he got a lot of gray hair. And then we'll get to George W. He came in right at the beginning of the dot-com crash. So, boy, that's called bad luck for yourself. Now, you look at 2004 right there. He gets elected, big run up going into the next year. That's a re-election right there. And then, of course, George W. comes in, dot-com's already starting, so it doesn't really matter. I mean, same thing with the 08 crash and the 08 election for that matter. And we'll go back one more right here just because we're sitting in a dot-com crash. And go back to 96. You can see your election, boom, nice big run up going through November, moves down in December. So a lot of it has to do with what's going on in the market at the time, but normally you do get to see, as you saw right there, a lot of times a rally after the election and stuff. But here's the funny part. This is the S&P index single-day average return since 1950 going to 2019. I did check the rest of them after 2019. It's the same. The best day of the year is almost here, it says, and it's October 28th. So this should be this Monday coming up. And usually it's 0.5%. I actually went back and verified this, and I went back to 2010, and it was 11 of the last 14 were green, like right out of the, I mean, the first like hour, 2 hours, right? But the ones that were rough were like the presidential election years. So it's kind of like, oh, okay, we'll get to see it. So it does throw things into mayhem, but it really depends on what's going on in the market at that moment, right? Especially in presidential elections. So let's see if Monday, we gap up or not, or crash down. But they say October 28th. The reason why, by the way, October 28th kicks off what they call the best 6 months of the year. You got that old saying, sell a man, go away, which is total garbage now, by the way. I think you've seen that with the returns since May. But this is what October 28th does. It kicks off the best 6 months of supposedly the stock market, okay? Your better, I guess, average returns and stuff. And so keep that in mind, especially going for the next week forward. Now, Mr. Tony here asked a great question. Says, I'm strictly a long-term value investor. I buy the stocks I like in lower fibs, moving averages, and when the stochastic RSI flips. Any good TA indicators for a dollar cost averaging strategy? And let me first of all say there, Mr. Tony, you get an A+, because what he is doing, and I'm going to use this on the Qs, he's probably using it on the individual stocks he does. Some people buy SPY and QQQ when it comes down. He is, as we've talked about before, he is combining three very powerful indicators together, right? He's got his moving averages, so we got the weekly moving averages right there, and then we come down with our fib, and then he's got the stochastic at the bottom, and so that's the momentum indicator. And so as it comes down, anything 0.5 or below, right? Golden pocket, 0.79, all that good stuff, you're buying in what they call a discount. You're not buying at a premium, you're buying at a discount. And then there's a 200 moving average. There's the stochastic starting to flip on the weekly right there. If you want a better sniper entry, you obviously can go to the daily, which we're going to in a second, but this is what you're looking at, okay? So now all of a sudden you have momentum starting to shift on your side. The 200 moving average is extremely powerful, and then you're buying at a discount. So A++ for Mr. Tony there. And I'll get into another one you can look at here for a second. But again, if you want a better sniper entry, just look over there and the daily as well. And you see we're at the 200 with below the 0.79 fib. I don't like to buy down here on the stochastic crosses down here. I like to actually go back up to the shade area before I even bother with that. Try not to get faked out. You can still get faked out, but still, that's what I like to do. But again, these are three very powerful indicators. You can add an RSI to this, a MACD, so you can see if the MACD is above the 0 line. You can see if the RSI is above 50 to let you really know if bulls are actually in charge or you're getting faked out. That's another one to look at as well. But something else here is pull up your weekly moving averages. Don't forget about those, because when you pull up your weekly moving averages, you'll see you'll rarely use them. But when you get especially an uptrend, like if you're just dollar cost average on the 50, if we're in a powerful uptrend, that's the way to go. If you ever hit the 200 weekly though, I would be dollar cost averaging in. That's just me, because you rarely hit it. Okay, you can see that. It's 1, 2, 3, 4, like 6 times since 2010. And we're 30% above it now. You think that's a lot? Nope. 2021, we were 42% above it. Normally, we're about, if on stretch times, normal times, 30%, 35%, somewhere in there. So we're getting there, right? We're definitely getting there. You can see. But yes, if you ever hit the 200 weekly, whoo, moving average, man. I mean, money to be made. But you can DCA right there on all the weeklies, right? DCA on the 50 because you're really going to hit the 200. But if you're in an uptrend, like after a crash, what I mean by I say that, after a crash, because normally crashes aren't going to come multiple in 1 year. You'll have one, then a couple years later, maybe 5 years later, whatever it is. But that 50 weekly moving average, you can see on the uptrends, you'll be up handsomely, okay? And you can see right here, we didn't even hit any of them. Hit none of them, did we? Had the 2022 crash, hit the 50 and the 100 one time in October 2023, and just took off like a bad eye, you know what. And so those are other ones. But again, I would go with Mr. Tony on what he's saying. There's others you can use. Please put in the comments what you would use yourself for that, okay? Now, next one comes from Dr. Marcus. Appreciate the question. He says, something that really confuses me is all this options flow stuff. I know you say sometimes why NVIDIA goes up, simple millions of call options. Why I'm confused about it is so many times I check options flows on unusual wells, etc., and show huge call option buys on a stock. Many times I buy those same calls and my options go down very quickly. I was always under the impression when lots of calls and puts come in, that's when MMMs or big money manipulate us and crush us with theta or walls. At least that always seems to happen when I join the big plays. You're probably definitely not alone. I mean, I've been there. I think everybody's been there on that because not all of them work out. But the big thing is, when it comes to these, what I'm looking for is call sweeps, right? Because they're trying to get them filled at any price. I'm talking $1 million, $3 million call sweeps coming in. And I've showed you this many times. I keep trying to find like a cartoon illustration that would show this if somebody's ever done it, and I can't find one. If you can't, send it to me so I can show it to people. What happens, because we've seen it on the video. We've seen, like Tesla yesterday, I think it was it was Friday. No, it was Thursday. Thursday had the third largest amount of call options ever bought in its history. Okay, and you saw it just kept grinding all day long. And yes, normally what happens is you'll see a gap up. Call sweeps have already been flooding in, right? And all of a sudden, here comes retail because now they're getting the data later after it's already happened and go, oh, look right here, I'm in. And then, of course, all those call buyers are selling because they're up 100, 200%, some crazy amount of money. And then, boom, ends up dumping on them, right? And so that does happen. But you can, and again, what was it? Jim Carson was talking about. I mean, options aren't the tail wagging the dog, they are the dog now, right? You're seeing it, these gamma squeezes, all this stuff, and it's even worse now, or more prevalent, because even retail now has all this access to unusual wells, cheddar flow. There's like 3 other sites on there. I can't even think of the name of them now, but all these different sites, you're seeing it, and you're seeing where the gamma levels are, and you're seeing when these huge spikes in the call options and premiums are coming in, and so people are diving even more in, really pushing, which of course exaggerates what? If we're pushing up, it exaggerates the downside too, right? When everybody starts to sell and everything. So yeah, it's just a different, it's just a different game now. It's nuts. I mean, honestly, I wish I could explain any better than that, but I did want to show you this because I had people question me on this. And I said in Thursday's video, I said, man, Tesla and NVIDIA ever start running at the same time, man, watch out for the market. And what I mean by that is this right here. You can see Tesla with the candlesticks. The blue, I think that is, I'm colorblind, is NVIDIA. And you can clearly see, man, they were running together for a long time. And all of a sudden, NVIDIA became NVIDIA, just started going crazy. And Tesla was like, I'm not going to do much of nothing, right? I mean, look at NVIDIA, up like 200% right there. And then you look at Tesla that very same time frame, like negative 8.5, like just nothing, right? Just nothing, because it became the new Tesla in the options market, right? You see right here, boom, we do this run up right here for NVIDIA, 149%, whatever that is, and you see Tesla. Oh boy, here we go. It was down, broke even, and so now all of a sudden Tesla's getting a lot of love, right? But there has been instances where, I say they come down together. You can see they clearly come down together, right? It's just trying to go up together. And there has been instances where this has happened, obviously. And when it does, that's when the market is really ripping, okay? And you saw that, and I'm going to get to it in just a second, in August, right? They both came down at the same time, and then all of a sudden, that August bottom right there, that's when the market bottomed in August, and made that crazy recovery right there. And they were both going up at the same time. Tesla goes up 22%. NVIDIA goes up some crazy, like 31%, right? And that really got everything going. So when they move in the same direction, it is extremely powerful, right? I mean, here, obviously, Tesla's going up big time. NVIDIA, it looks like it went up great. I mean, it went up okay. It was okay. But again, this is what you want to see if you're looking at trying to get this year-end rally and all that good stuff. And right now, Tesla's getting all the love, right? And NVIDIA, you know, it's doing fine. Even on Friday, it did okay. But the question is, can you put multiple days together or multiple weeks? That's what you're really kind of looking at here, right? But you can tell it seems like this whole time they've just been rotating on and off with each one of them. Hopefully, you kind of see that now. Now, the next question here is, why wouldn't people buy into TLT as the market goes down? It's a nice hedge in a down market. TLT only going down because of the 10-year. That's actually true. Asking, it was not just the 10-year, but anyway, asking because when we had the COVID crash time frame, stocks were down and TLT was up. Yeah, it's a good hedge. And let me show you this. Here's the 10-year yield, the S&P. Normally, in a crash, a market's going down over 20%, and we're going to a real crash because there's going to be a recession and stuff like this happening. You will see the 10-year fall off a cliff, right? You see it right there in the .com. You see it right there in 2008. You can go to 2018. You can go to 2020, and you see the same thing. What's really funny about it, though, is when you go to 2022, right? That's the 2020 crash right there. 2022, what'd you see? The market crashes, and what's the 10-year do? It goes up, right? It goes up a lot. And so, again, that's how abnormal things were or have been. And all of a sudden, it crashes down. So, boom, and here's the 10-year popping back up. So, TLT looks like crap, right? And you can see right here, in 2022 crash, I'm going to get this up here. You can see TLT crash with the market, which that's a rare thing to see. I just showed you all the crashes before, okay? But the bond market was telling us something, right? Now that I know more about the bond market, I know to look for this stuff in the next crash. So if we start to crash, don't just dive into TLT. Like, look at what the 10-year is doing. The bond market was telling us something, okay? And right now the bond market is telling us something as well. And that's why TLT is suffering. That's why Druckenmiller is short this one. That's why Paul Tudor Jones said he was short. I think the long end of the curve, if I'm not mistaken, right there. And so, yes, if it's crashing, just watch the 10-year. That's all you got to watch. Don't worry about the market. Watch the 10-year. If it's going down, TLT will be bouncing, okay? So hopefully that makes sense. Now, last one here says, hey, Mike, which fibs are you using? There's so many TradingView, and I'm looking for the ones you use. Thanks. When you look over here, you can see clearly. This is the ones I use: 0, 0.236, 0.382. But the key ones are 0.5, Golden Pocket 0.79, simply because that way you're buying at a discount or selling at a premium, depending on what you're doing. But again, and so like, for example, the other ones I use, obviously, I'll take that away. If I'm trying to do a fib extension up and figure out where we're going right here, is the 1.272, 1.5, and then 1.618 is what I use. Some people use 1.382 as well. Some people don't even use the 0.236, 0.382. So it's whatever you feel more comfortable with. But that's the ones I use, so hopefully that helps out right there. And so I appreciate all the questions. Feel free to put more in there for next Saturday's video. Always enjoy answering them for you. And please hit the like, subscribe button. Think about sharing the video if you like. I really appreciate it. Think about signing up for the membership and listening to McDonald's combo down there, as you can see. And that is everything you get with it right there. And I will end up seeing you guys tomorrow for a crazy week ahead. Have a good one, guys.